Hi everyone, Steve Margerson here from the Forex Codes. Welcome to part 2 of the beginner's course. Now I'm going to teach you how to trade as an art form, not as a mechanical system. Some people might be surprised at that. This is important because it's no good giving you a fish and feeding you for the day. What's the point? What's the rest of the saying? I'll teach you how to fish so you can feed yourself for life. How's that? I'll teach you how to trade in a discretionary way. We don't follow mechanical systems. Mechanical systems don't work. And let's find out why. Risk disclosure first. Now you've got to read this and you've got to understand it. Past performance is not indicative of future results, as returns may vary according to market conditions. Trading foreign exchange carries a high level of risk, of course it does, and we've got to try and mitigate this, but it does, and may not be suitable for all investors. Before deciding to trade foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. Important. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. Okay? Trade Forex as an art form. What I'm meaning there is we don't really do mechanical systems because they don't work. Well, they might work on occasion, but they don't work long term. And we're talking about long term investment here, Forex trading. We're not talking about get rich quick schemes. And I think a mechanical system, it's the lazy man's way of trading, you know, get rich quick. You've seen them all on Instagram and on some YouTube videos where the guy is standing next to the Ferrari. Look, I can go to a garage, stand next to a Ferrari, throw some dollars on the top of it and say I'm a successful trader. Am I a successful trader? No. But I'm fooling a lot of bastards out there. Excuse the French. It just gets me angry, but it gets more angry that these people fall for it. Jeez. So, getting a mechanical signal or having someone send you signals, you know, you've seen it everywhere, buy these signals. I think long term it doesn't work because how do you know what their thought process was at the time that the signal was issued? If you get what they call a black box system, it doesn't take into account what's happening with the news and what's happening in the market. In addition, you know, when a signal comes out and is sent to your mobile from the company, whichever company it is, the market can change in seconds. So what was right at the time might not be right a minute or 10 minutes or a half an hour later. That's my only thing with signals. Yeah, if they're working off a daily chart, it might be easier for them to be successful, and some are. But in general, I think you're better off learning how to trade. Or getting a successful trader to trade for you. So I'll teach you how to trade in a discretionary way. And the idea is to learn from successful traders. Mechanical systems are seductive. And for the sake of repeating myself, because I really need this to sink in, it attracts the get rich quick brigade and usually ends in tears. So the idea is to teach or to learn how to trade using concepts that really are timeless. I'm using some stuff that people were using 70 years ago, you know. Am I proud? No, I just make money, you know, I don't care. These concepts have been around for years and the professionals use them. They use them today, they were using them yesterday, and they'll use them tomorrow. You know, we all may adapt as the markets change, but the principles are very much the same. I was taught by one of the best traders, very fortunate. That's a story that's in my book, the book on Forex trading, but it's too long a tale to tell here. And I'm passing the same information on to you as I promised him I would do. Again, that's another story. So knowledge is power. Oh yes. Once you learn how to see things from a successful trader's point of view, you can erase the feelings of risk to some extent and the lack of confidence that holds many people back. Let's work from this viewpoint. It's good to learn from your mistakes, your own mistakes, but painful, isn't it? Costly too. It's better to learn from the mistakes of other people. That's less painful. But better still, learn from the successful ones. Learn how to do it right and copy them. Nothing wrong with copying, folks, believe me. There's very few new things out there in the world, unless we're getting it into the quantum realm. So, it's all about knowledge. And the barrier to entering Forex trading business is not money, it's knowledge. I mean, you can start Forex trading with a spread betting company with a few £100. Obviously, with such a small amount, you're going to start slowly, but at least you can start. So, the barrier really is effort, discipline, and the ability to follow the rules. People don't understand or recognise that these things are more important than the actual charts. Effort, discipline, and the ability to follow rules. Any worthwhile endeavour needs effort to succeed. Nothing worthwhile is gotten without effort and application. Also, those of you who've been Googling Forex will have seen this Holy Grail thing. There is no Holy Grail of trading. There just isn't. There's no easy fix, and it's not a get-rich-quick scheme. I'm putting you straight here. I'm in my 16th year of trading. I'm just putting you straight. Now, there are no secrets. I'm sure some of you are going, and I have done it as well. I've been on YouTube and there's a headline video that has 10,000 views. Don't trade Forex without knowing this secret. It's bollocks. Seriously. Seriously. That's an internet marketer who's never traded in his effing life trying to sell you something. If anyone says to you, I'm going to teach you some secrets, keep your money in your pocket and run as fast as you can in the opposite direction. I'm serious. There are no secrets. Next, scared money never wins. You can't go into Forex trading with the mortgage money or the rent money. Because the pressure of having to pay the mortgage or having to pay the rent, the pressure on you while you're trading to not lose that money, psychologically it makes it impossible for you to make a correct decision. And then your discipline will go out the window. So you've got to have money. It's a cliche, I know. But you've got to have money that you can afford to lose. Scared money never wins. You've got to have heard that before. Yep. This is all part of trading psychology, which comes later in the course. And in my opinion, my humble opinion, successful Forex trading is 80% or more, let's just say 80% plus psychology, 20% methodology. So, as I say in New York, scared money don't make no money. What an accent, eh? Should have been an actor. Most successful traders are average people with average intelligence. Now, get this straight. I'm going to say it again. Most successful traders are average people with average intelligence. Absolutely. They just know the things that other people don't know about trading. Does that make sense? They found out what the elite investors do over and over again and copied them and got great results, similar results. It's not rocket science. All you have to do is copy the process, tweak it to your own personality over time. Now, this is an important point that I'll go to in psychology, but eventually your trading style will be more aligned to your own personality. You know, I've watched videos on YouTube, which I think are nonsense. That people can only trade the daily chart. Everything else, you just can't trade it. I mean, I just can't believe people have opinions like that. There are many successful day traders out there. And if you want to trade the daily chart, then trade the daily chart if it suits your personality. If I was to trade in the daily chart, I don't think I could be a trader. For me, it would be like watching grass grow or paint dry. But it just doesn't suit my personality. Trading the 15-minute chart, where I'm in, done and out, that suits my, what is it, OC, DC personality? I don't know. AC, DC? Anyway, that suits my personality. So it just takes experience to work out what trading style suits your personality. And we can still use the same strategies, we just might use different time frames. So don't take that as being nonsense, that personality doesn't matter. Of course personality matters, doesn't it? Think about it. We're all different human beings, and so we trade in line with our own personalities. That is what I believe, and that's what I'd like to pass on to you. You can make up your own judgment. And it takes experience. Anyone can do it, and I mean that sincerely. You don't need a university degree. In fact, the more educated you are, I think the more of a hindrance this is. You don't need a high IQ. Social status is irrelevant. You can be the bee's knees of your community, but it doesn't mean you can trade. Housewives, CEOs, business people, professors, factory workers are all in the same boat and have equal chances of being successful in Forex trading. Yep, I've seen it. Absolutely seen it. I was a coal miner's son, my father was a coal miner, his father was a coal miner, his father was a coal miner. And I was an airborne soldier, proud to say. That didn't stop me being a successful trader, did it? And neither will it stop you. You've got to believe it. Hey, I noticed that when we talked about the New Yorker, this slide never came up. You know, when we said, scared money don't make no money. Oh well. You've had to suffer through that again. There you go. So, what is Forex? Put simply, well, for a start, it's the world's fastest growing industry. And it's simply the buying of one currency and the selling of another at the same time. You know, unwittingly, anyone who's ever travelled abroad has traded Forex. I'm sure you have. You just think about it. If you're from the UK, you went to exchange your pound for euros for your trip to Europe. So you bought euros and sold pounds. That's a Forex trading transaction. And Forex is bought and sold in currency pairs. Okay? Forex is bought and sold in currency pairs. For example, pound against the dollar, Great Britain pound against the US dollar. The first currency mentioned, a bit of jargon now, first currency mentioned is the base currency. So the first currency here in the pound dollar currency pair is the pound. The second currency is the counter currency, in this case US. The base currency is always one. and you'll see why in a second. So in a pound dollar currency, pound would be the base, dollar would be the counter. So if you quoted, say, the pound dollar is $1.3220, this means that every pound you exchange, you receive 1.3220 USD. It's that simple. If you want to exchange £10, you'll receive 10 times 1.322, which is 13.22 US dollars. Yeah, so the base currencies first. So if you quoted a currency pair, US dollar, Japanese yen, US dollar will be the base, Japanese yen is the counter. So let's say the US dollar Japanese yen is quoted at 110.24. This means that for every one United States dollar, you'll receive 110.24 Japanese yen. Yep. And notice for the yen pairs, there's only 2 decimal places. That's just the way it is. That's how you read the currencies. If you're not sure, just have a read of that slide again. And here are the 8 major currencies. Not currency pairs, just currencies. And the symbols. AUD, Aussie dollar, Australian dollar, and it's nicknamed the Aussie. The CAD, Canadian dollar, which is sometimes nicknamed the loonie. One day I might go into some of these nicknames and why they got the nicknames. CHF is a Swiss franc. The Swissy. EUR is the Eurozone, the Euro. Nicknamed the Euro. Eurozone's boring, isn't it? GBP, Great British Pound. Nickname cable. Right, I'll tell you that story as well one day. JPY, Japanese yen, nicknamed the yen. NZD, New Zealand dollar. Kiwi. And USD, US dollar, the buck, if you like. Okay, those are the major currencies, the major 8 currencies. And these are the major currency pairs. 7 of them, really. Pound dollar, euro dollar, dollar Japanese yen, dollar Swiss franc, dollar CAD, New Zealand dollar, US dollar, Aussie dollar, US dollar. See, the US dollar is in every pair, isn't it? They constitute the largest share of the foreign exchange market, about 85%, give or take, and therefore they exhibit high market liquidity. I'm coming on to liquidity in a second. You can make enough money on one currency pair, trading one currency pair. Yep, you really can. So you don't need to try and study all 7 currency pairs as a beginner. It's an impossibility anyway. Just do a couple, 2 or 3, 1, 2 or 3. Watch how the pair behaves, and become an expert in this niche of that currency pair. My favourite is the euro pound. In January 19, I've traded mostly euro pound. I get a flavour of its nuances, a flavour of its ups and downs by spending screen time on that currency pair. I also trade the pound dollar, euro dollar, and pound New Zealand dollar. But euro pound is my favourite currency pair. So how big is the Forex market? Well, some say $5 trillion per day. I mean, it's unbelievable, isn't it? I can't imagine that much money. It's a 5 with 12 zeros after it, traded every day. Some say it is a staggering number, and some say it's the biggest cash mountain in the world, the biggest money mountain in the world. You know, as traders, we only need to take a minuscule part of this money to get financial freedom, to pay bills, if you don't want to go that far. It's the most liquid market in the world. Would you not like some of this? And I'll say it again there. It's the most liquid market in the world. What do we mean by the most liquid market? This is an important point because you'll hear about liquidity. It just means there's always going to be a buyer if you want to sell. There's always going to be a seller if you want to buy. So you can get out of position instantaneously. Now you can't do that sometimes in the stock market. Some stocks are very illiquid and you can't just sell that easily or buy that easily. But not with the Forex market. There's always a seller, there's always a buyer. So you can sell now, you don't have to wait till tomorrow. And some pairs are more liquid than others. But those 7 currency pairs I showed you on earlier slides are the most liquid. The major pairs of high liquidity most of the time. Okay, separate topic. Forex is traded through the 24-hour interbank currency market, or as I call it, the big robber banks. Out to robbers. More about that in later, more rants in later videos. This market never sleeps. It's a 24-hour currency market. It never sleeps. It's 24/6. It never sleeps. It's not like the stock market where it say opens at 8 and closes at 5. This market follows the sun around the world, as we like to say. It follows the sun around the world. Let's take a look at that on the next slide. Trading sessions. Well, really, it starts Sydney, 10 o'clock in the evening. Sydney, Wellington, right? Follow the sun around the world. Then goes to Asia, Tokyo and Hong Kong. The next session to open is Frankfurt at 7, London at 8. Then New York, United States. And then when that closes, Sydney and Wellington are opening again. Yeah, just goes round and round until Friday night, 10 o'clock. Okay. Now, finally in this section is a reality check. It said 95% of traders lose money. Some even say 90% of traders lose 90% of their account within 90 days. Whether that's just a saying, I don't know. Regardless of the amount of expensive trader education out there, for most people trading is a very difficult and time-consuming business. And 95% of traders lose money. That means all the dosh traded is in the hands of the remaining 5%, and they make all the money. So, if you want to become an elite trader or even a good trader, you need to learn the basics. Learn the trading rules, stick to them, and work hard. Absolutely. So there you go. The winning traders take a very big slice of that pie. Yeah. 5% of them take 95% of the cash. So, what you want to do is get yourself to expert status as quickly as you can with a bit of application. Okay, in the next video, video 3, I want to go through pips, what a pip is and how to calculate pips, and do leverage and margin. Yeah, get your thinking cap on in the next video, and we'll do that. You know, we are keeping this basic to start with, bringing you along slowly, but it's going to get a little bit more complicated in the next the next video. You've got an email there, the forexcodes@gmail.com. We've got an Instagram channel where we've got videos most day, 1-minute videos and posts. Website as well, which is 3/4 finished. And we've got a YouTube channel, the Forex Codes, as you know, because you're watching this video. Now please, if you've got other friends who are beginners who might want to learn to trade Forex, introduce them to this video channel, subscribe, share, like the videos. If you find during this series that Forex trading might not be for you, then join my Forex managed trading account and I'll trade the money for you. Okay? Folks, how you do anything is how you do everything. Take care. Part 3 coming up.